Hello and welcome to the Cryptocurrency News channel. We're going to do the TA chart FA analysis for January 12th, 2022. Now, let me remind you guys something. On TradingView, they kind of go by Asian time. So TradingView, it's already the 13th, 4 o'clock in the morning on the 13th. So the weekly view, this is not the 5-day view. I actually dragged out the weekly view, is actually January 6th. So this is actually kind of the weekly view right here. And you can see for the first time in several days, we actually have kind of a bullish trend on the weekly view. You know, the highest point over here is actually slightly lower than the highest point today. And, you know, we have this cap here is going to be slightly higher than this cap. Yes, we did bottom out here, but you know, today's CPI report did not scare off investors, and we were actually bullish today. So it could be the first signs of a reversal. And you know, if you want to look at the true 1 week graph, you just look at CoinMarketCap's graph, and it shows the same thing. As you can see, top to top, we are bullish. Now, bottom to bottom, it's really hard to say. We haven't had a really big dip since, you know, like 2 or 3 days ago, that actually surpassed the last low. But right now, if you look at the top, you know, the top over here on January 6th was 43,200. Now we went up all the way up to 43,000, almost 44,000 today. I actually saw it break 44,000 for a little bit. So we are significantly above the January 6th peak. However, we shouldn't get too happy yet, because to me, that's not a true bullish sign. To have a true bullish sign, we need to go back even further, and we actually need to be at least in par with like this right here, which is 47.5, but hopefully at 48. So if you actually look from the beginning of the year, if you actually look at the beginning of the year, we're still down. January 1st was right here. So if you look from the beginning of the year, we are obviously still down. So we actually need to basically surmount this peak around 48,000 or 48,500. Ignore this line. I just drew it on accident on TradingView. So right now we shouldn't get too happy, even though this is the first day you could possibly say that we had a little bit of a bullish reversal, because right before, like if you back up not 7 days but 8 days, you would still think it's bearish, but with a possibility of a bullish reversal right now. But you know, the fact that the CPI didn't drag prices down even more is a bullish sign. That means the CPI was somewhat priced in already, or that the CPI numbers just weren't as bad as people expected. As far as I heard, the CPI numbers were about in line with what people expected, and people were already expecting a dip. They priced it in the last few days, and we actually got a little bit of relief because people aren't as afraid anymore. It's really the fear, it's really like kind of like the fear index that drives people right now in asset buying and selling, not so much what the actual number is. Everyone knew the CPI was going to be fairly high. But the question is it going to be high enough to scare people today? And the answer is actually no. And you did actually get a pre-meeting pump, which actually held through post-meeting, because the numbers that came out were just in line with what people expected. And if they were like higher, people might have dumped. But since they were not higher and people expected it, the price actually pumped. So that's kind of like what happened right now. So that's actually pretty cool, that we actually didn't have any more fear to actually bring it down. And I do think we'll start recovering. I'm looking at end of January to maybe hopefully clear 50,000. I do think it's going to be kind of a slow process. I mean, we could get a giant spike, but I do think it's going to be a slow process. It's going to take a week or two. So towards the end of January, I'm really looking at 50,000. Whether you look at TradingViews or CoinMarketCap's graph, the last 7 days are finally bullish. Now, if you look at the technical analysis, the numbers on the technical analysis, we're starting to turn bullish as well, especially on the daily. The exponential on the simple moving average are both buy. The exponential is greater than the simple, and where we are right now is slightly greater than the exponential. It's like within 40 points. So this action on exponential average on 10 should actually be neutral. This should be buy, but it is trending in the correct direction. The relative strength index and the stochastic are actually neutral now, and so is the commodity channel index. So the oscillators are not saying buy anymore. The average directional index is about the same as it was yesterday. So right now, like on the 1 week momentum, it does actually look positive. Obviously, if you're looking on 20, 30, 50, that is like definitely negative. But if you're looking to see if the 50 average is above the 200 average or not, no, it is still below the 200 average right now. So the death cross still maintains, but as we've discussed, the death cross is generally a lagging indicator, and we might have actually turned the corner right now. It could be a bull trap, but you can't really just say like every time it goes up, it's a bull trap, because a lot of times that does end up being wrong. I do think the CPI thing was what people were scared of, and now that's actually over, and it wasn't like worse than what people were expecting. We might actually make a bullish reversal. Still watch out for small dips though, that can definitely happen. On the weekly, it's still not looking very good, because we still have to get above like that 48, 49 to get the 10 exponential moving average to buy. Same thing with the simple moving average, you have to get it above 50. So if you're looking to buy for the rest of the month, it still looks like sell if you go by the technical indicators. The commodity channel index, is negative 93, which is getting really, really, really close to oversold, but still not oversold. The stochastic is still oversold in the weekly, and the average directional index is still pretty neutral. So I would say this actually borders more on buy than sell on the weekly. Right now, I would be favoring buy slightly more than sell overall, going into next week and the week afterwards. I generally am not a huge fan of the last 2 weeks of the year because of the last 2 weeks of each month because of the futures expiry. But I think the CPI scare is over, and we might actually neutralize and stay stable until like the last Friday, which is the 28th of January, maybe slowly going up with a couple of retraces. I don't really know where the futures are right now, but a lot of times, like around that time, prices tend to be a little bit bearish. But I think overall, the momentum going forward is a little bullish because the CPI wasn't worse than what people has expected. People were expecting a high number. They got a high number, but they didn't get an extremely high number. Yes, greatest CPI in 40 years, but people were kind of expecting that with a pandemic and all. So right now, we're looking at kind of, I'm actually kind of bullish overall, both on the oscillators. And moving averages, I can't really argue with it. They're just like pure numbers. But I think since the CPI scare is over, I would actually be more buying than selling if I was trading around. On the monthly, right now, obviously, it's still very bullish. The exponential moving average and the simple moving average, right now, like we're actually still below those, but I can actually see those flipping by the maybe next week, hopefully, maybe by the end of the month. But if you're buying for the long term, it's definitely still a buy. It's not a sell, it's still a buy. All the oscillators are pretty much neutral. The big thing in terms of fundamentals is the CPI report. That actually came out better than I thought. I was really afraid that the CPI report was going to say something really, really bad, like out of the ordinary bad. And I knew as long as it didn't do that, people would probably buy in. But as we were talking about yesterday night's stream, it could have easily done that. So I wasn't as bullish as I should have been yesterday. But still, it didn't come out that way. I'm very happy. And I think the momentum is actually more shifting to positive now, especially if inflation sort of tapers off towards mid-2022. We will have to see if that actually happens or not. Like, the employment rate's still really high. People are like quitting their jobs to find better ones. So I'm not really that afraid right now of what's actually going on out in the market. And I think people are fairly bullish at this point. So that's kind of the analysis for today. Let me know what you think. Like and subscribe, hit that bell notifications button, and I will see you guys tomorrow.